Amazon has dropped below the $1 trillion valuation after it missed its earnings target. So, is this a good time to buy? Sit tight as we answer that by going through recent news as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. The third quarter earnings report showed a revenue of $127.1 billion, falling short of $300 million from the predicted $127.4 billion. The earnings per share stood at $0.28 per share, which was better than the expected EPS of $0.22. But what really stood out in our opinion was that Amazon Web Services underperformed as well, reporting a revenue of $20.5 billion against the expected $21.1 billion. The company has given a forecast for the fourth quarter results as well, which has again left analysts disappointed. They said that they expect the revenue to be between $140 billion to $148 billion, indicating a 2 to 8% year-on-year growth, which is $7 billion less than analyst projections. This, of course, crashed the stock's price, going down from $120 to $96 in the after hours on Thursday's trading session. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the one-day chart for Amazon, and right off the bat, we can see that over here, we're currently at a price of $97.8 on the pre-market. If, I tell you guys what I analyzed already, we went to a price of pretty much $86 or $87 in the after hours yesterday, but in the after hours themselves, we recovered back to a price of around $95, $96, somewhere around there. And after that, on the pre-market, of course, we can see that we've risen a bit to a price of pretty much $98. Now, as you guys can see, we've made the first candle of the day. So we'll quickly let this, form a bit. Until then, we'll analyze the past trend. So we can see that we have a support, or rather we had a support around $101, $102, right? Of course, $100 as well as a psychological zone, but we've already fallen below it. Now, as you guys can see, we're going bullish full on, and we're probably headed for the $100 resistance. Once we hit that, we'll probably get a pullback, and the stock will probably realize that it's too difficult for it to break through that. Now, there are a few reasons why it might just break through that in a few days despite the negative earnings. So, of course, first up, the stock is fundamentally good, and investors might just think that, hey, it's a good time to buy and we should probably buy in. That is pretty much what I'm thinking on my own as well. So, we've already touched the $100 level, and we got resisted, as you guys can see, but we'll analyze that later when we are analyzing the intraday movements. But for now, we can see that we were in a bearish trend for a long time, pretty much just 2.5 months, I guess. Right over here, we did make some points where the stock seemed like it has tried to reverse, but of course it got resisted. Like this point over here, we tried to make a higher high at 138, but we fell on 136 itself. Of course, over here as well, same thing, right? We tried to go to a price of 125, but we fell from 123. After that, we fell from pretty much 121 over here. And now, well, there is not even any room for further fall. Of course, we've fallen to the lowest that the Amazon stock could go. And below $1 trillion, of course, a company like this is pretty rare to spot. So if we talk about what's going to happen from here onwards, in my opinion, we'll probably recover because as I already told you, regardless of the fact that we missed this earnings report, but the fact that we got to know that the fourth quarter will likely be a miss as well, we probably accounted that in this fall itself. So we probably won't fall that bad when the fourth quarter's earnings report comes out. So, of course, considering the fact that the GDP grew yesterday, we are getting some support by that matter, right? Of course, we could not get that yesterday itself, but with the mortgage rates high as well, that is a troubling factor. Inflation is on the rise, of course. Fed is trying to control it. They're doing everything in their power to control it, and they probably won't care about the stock market if it means that they'll get to control inflation. So, considering all of these factors, in my opinion, Amazon stock will probably stay, it will probably recover above the $100 level, but I hardly see it getting a bull run anytime soon because, of course, we all know that the market is kind of trapped in a certain range at the moment, and it will likely not break that range alone, right? There won't be any stock that can break that range alone. If the entire market recovers, of course, that might be the case, but, no speculations right now. In my opinion, we should probably just use this time to accumulate some good stocks like Amazon, even for example. This If I were to rate it, I would probably rate it a buy, of course, not financial advice, but looking like at least 1 to 2 years down the line, in my opinion, we should probably be able to cross the $200 level once we get out of this inflation trap. Of course, we will get a hard pullback once that is done, but it still is doubling your money in a year or in an year. With that being said, if you just wanted the 1 day analysis, the long term forecast, of course, Amazon is a great company. There's no doubt about it. So if you're a long term investors, go on. It might be a good choice. But with that being said, if you're a swing trader, let's quickly analyze the 1 hour charts for you. So now that we're in the 1 hour chart, we can see that we made a negative pin bar candle over here, which of course had to act up the next day. We did make a positive pin bar candle, which got discarded by the next candle, and of course it led to a reversal on the downside. Over here we can see a similar scenario, pin bar candle, good, another pin bar candle from the upside towards the downside, and then we got a few negative ones that indicated this fall, right? So of course, as you all know probably by now, pin bar candles are my favorite candlestick pattern. But looking at this current candle as well, it might be forming a pin bar to the downside. And if this is followed by a pin bar looking like this, which has a wick on the downside and a body on the upside, of course, and what do you call it, another small wick on the upside, then we might be in for a reversal and a good one as well. And we might just break the $100 level then. For this candle, I honestly think that the volumes might help break the $100 level, but I don't really see the stock calming off that fast. If you're thinking of taking a swing trade, I personally would avoid it. Amazon is not exactly the stock where you'll find good swing trades, right? Of course, we did get some opportunities over here, for example, right? Let me get you guys a good example for a swing trade over here. For example, when we were kind of inflated over here, you could have shorted the stock when we got this pin bar candle to the downside with a stop loss over here at 123 and a target twice of that. So shorting it around 118, $5, so $10 would be the target. So going down at $108 would have been your target, and it would have been completed in like, I guess, a week. So that's still pretty good returns, right? That's pretty much 8% returns in a week, 1% return per day, pretty good. But if we look at the current scenario, I don't really see any swing trades over here, of course, because as I already told you, this fall was motivated by the earnings and the news and not necessarily the technicalities. But with that, I don't really think there's much left to analyze on the 1 hour chart. So let's quickly jump onto the 5 minute chart where the real stuff lies. Now that we're in the 5 minute chart, I have a little surprise for you guys. We'll quickly get into the extended trading hours. And over here, this is where the main stuff lies. So you can see that this was the first after hours candle, which sent the stock down by well over 20%, right? We hit a support around 87.5, or rather just, the 87 to $88 range would be a safe say. And we also have a support around $95 and a resistance over here around 98. As you guys can see, we did get resisted over here and over here as well. We made some double tops rather over here at 97, which is a psychological zone, right? We also have a support somewhere around 96.3 pretty much. And now if we look at the current candles, we are on our way to make somewhat of a trend on the upside if you ask me, right? We did get this cool off candle, but as long as this does not, the body of this candle does not exceed the body of the previous candle, that would be a reverse engulfing candle, and that might mean that we're in for a relief. Of course, if so this is a good scenario as you can see. But if, as I already told you, the body exceeds this candle, that is a bad thing. So we can see that we did get resisted over here around the $100 range as we already discussed previously. So in my opinion, what should happen likely is that we'll probably continue a bull run from over here, get into this range, get resisted around 102, and then probably stay over here, right? After that, of course, it will be a volatile day because, the earnings report, it really messed up things. But if you ask me, and if you ask what my gut feeling is, I personally believe that people should buy up the stock at this range because, of course, it's a great stock. And who wouldn't want to buy such a solid company's stock at such deflated levels, right? As you guys can see, we're already continuing the bull trend, in my opinion. So, of course, we did get supported kinda. We made somewhat of a double bottom at 97.9. and we might just be in for a good beginning. Once we get um, what do you call that? Once we get resisted over here, we might just get in for another bearish trend, right? It just might be the beginning of another bearish trend. So we'll probably get a pullback over here. That could be the possibility as well. So of course, trade with caution and after doing your own analysis. But if you ask me, if you're an intraday trader, of course, if you're an intraday trader, you should always look at the current candle and the previous candle movement, and of course the overall trend, and maybe use an indicator. I personally use super trend, EMA, and CPR, but that would be good for you. And if you're a long-term holder, of course, just in my opinion, I personally am buying the stock, and of course, it's at good rates, $100. There's a guaranteed, or not even exactly guaranteed, but there's a pretty certain chance that you'll get at least 20% returns in a few months. So that is a good deal in my opinion. But remember that this definitely was not financial advice and it was just my own opinion. So you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stocks 101 for more such videos. And as always, I will see you guys in the next one.